are in listen-only mode.
Good morning and welcome to the weekly technical analysis review with Warren Peacock. My name is Dineo, and before we begin, I just need to make sure everyone can hear me. So could you please lift your digital hands? Okay, great. Warren, over to you.
Can you share my screen, Dana?
Uh, Sorry. Here we go.
Thank you. Thanks, Dana. Good morning, everyone. Okay, starting out with the J200, the top 40 index. We've seen quite a nice rally over the last 2 weeks, and the market went straight to 48,000 up there, and it hit resistance. The concern for me at the moment is that shooting star. Oh, it just closes that. Why is it even open? Go away. So here we have a shooting star at resistance. That's a little bit of a concern for me on an end of day basis. We'll go see where the market opened this morning. That shooting star would be invalid should the market close above its wick. So if it gets above that 48,310 level, then that shooting star would be invalid, and we're straight up to the next level. So there's quite a bit of resistance over here. We'll see how the market moves off these levels. So we've got the next resistance level just above it there at 48,450. Then the wick of that candle 48,680, and then the all-time highs at 49,100 and something. So there's quite a bit of resistance there, but it is looking pretty positive. Let's see how this week goes. On the share front, I've added Old Mutual into the watch list here. The financial index is starting to move a little bit higher, so it's time to look at some of these financial companies again. And Old Mutual in a smaller consolidation at this point, which is part of a larger potential consolidation. So we've looked at resistance there at around 36.50, and we look at the current support level 31.50. There's potential for Old Mutual to move off these lows. We can see it's been sold off quite heavily, pretty serious downtrend since the fourth quarter of last year. Of 2015, and there's potential for this base. I don't really see a chart pattern there as such, but certainly it seems to be building a base at around that 32 mark. So I'm going to stick Old Mutual on the watch list. I'm looking for a break and daily close above that resistance level there. Let's just get a price close above 34.12, 34.13, and then I'll be quite interested to have the first initial go at Old Mutual. If the averages cross over, I want to see it break out anyway. So 21.89, the blue and the red getting close to crossing up now, but I want to see it break above that resistance as well. The averages won't be good enough in this consolidation. So Old Mutual looking interesting and will be on the watch list at this point. And that's really all I can see on the new front. There's quite a few stocks that have moved last week, obviously with the index going up. We know some things have moved, but none of them seem to be making a higher high. So I'm going to wait and see whether this market's actually got some momentum going forward. Let's just start out with the shares that we've been watching for some time. So BTI, we're still holding. Bats, that head and shoulders, I think, is cancelled now. Too much time on the right-hand shoulder. I'm putting a time stop on the pattern. It doesn't mean that these support levels get removed, but certainly I think the head and shoulders idea is probably over at this point. And I'd like to see it breaking above that 950 level, or the highs would be even better at 958. I'd like to see some momentum come back into the stock before I have another nibble at it. And the stop loss for the current trade is still on that dash red line at 867 or below 867.70. Vodacom has performed nicely. That's looking pretty decent. There's nothing to do on that one at this point. If you're in it, you're in it. If you're not in it, you'll have to wait for the next opportunity. But at this moment in time, the trade looking pretty decent, and Vodacom showing some good momentum. Obviously, with these big candles, there is potential for a consolidation again, sort of a smaller consolidation like that. We'll just have to see how the market plays out, but certainly for now, looks like good momentum, and looks like we're going to have another good week on Vodacom. Capitec is holding above the highs, not great momentum after that run up through the 800 mark, hitting 848 on Friday, still closing higher than previously, so you can see that the day closed higher, so holding above resistance. I'm quite happy with that trade at this point. The stop loss is going to stay at 750 for now. The Netk we've been watching for a while. It's still building that base. That double bottom will still be in play. It's not the same idea as the head and shoulders. That support level needs to be broken for the double bottom to be negated. So at this moment, I'm actually just waiting for it to get above that 26 level. Well, maybe not quite 26, but that resistance certainly at 25.95, 25.98. So let's just call it close above 26. Could be a first nibble. And then certainly a break above that important resistance at 27.42, this level here. That would be quite important because then we're making a higher high. At this moment, we're still making lower highs, but we've got what looks like a pretty solid base in place at this moment. A break below that would see me stopping out on the initial trade, but certainly looking for another entry on Netcare. Aspen, similar story. That crack and snap is still in play. It hasn't moved back below that level. The stop loss is going to stay there for now. But Aspen not really moving at the moment, just in a tighter consolidation within a larger consolidation. We can see Aspen's been punished quite heavily. So I'm going to see how that pans out. We're just watching it for now. Investec pulling back above that resistance. This old resistance level has been there for some time now, so 97.97. So make it 98 Rand a share. And it's at the moment it's just holding above that, but it's not really holding above that 99 level, which is what I really want to see, pushing through 100. So at this point, it's just a hold. Coronation CML, it's got this initial higher low. The crossover's occurred, so I'm quite happy to hold on to CML. If you're not in it, you could probably have a nibble at these levels. The stop loss still has to be down at below support there, so let's say 59.90, maybe 60 Rand 10 cents, somewhere there. I'd prefer just a little bit lower, make it 60 Rand 50 or so. And certainly the averages have crossed up. We're still in a bit of a bigger consolidation, but there's decent distance from 67 to 79, which is the next important resistance level. So I'm certainly keeping an eye on Coronation. I'm looking for another entry into that. Then we've got Richmond, that's holding nicely. It's just not getting above that resistance and holding on to the highs. So I think I'm just going to, I don't like moving these levels too soon, as the market is still respecting that area. So I'm going to put a second one in there, just on that wick. And a break above that would be confirmation of the move higher, so at about 110 Rand 80 cents. For now, Richmond, just a hold. If you're not in it and you're waiting for something, then a close above 110.70, 110.75 would look pretty decent. And we can see Richmond had a rough time, but it's recovered quite nicely, moving off that 80 Rand low, now sitting at 109. I was going to have a look at some of the intraday stuff. Start with the Dow. That made new highs again and has since just, there was the breakout, I think it was a week and a half ago, and then the market just held on to those highs. It hasn't really pushed it anywhere, and it's just finding some support at the previous all-time high. So the Dow kind of stalling at the moment, but it's had a history of doing this. It breaks out, it stalls a little bit, and then it moves again. So at this point, it's still just a hold if you're long. And I'm expecting that trend at this moment to continue higher. We haven't had a lower high yet, really, and certainly not a decent lower low. Have a look at the dollar rand. It's consolidating still, and we can see it got sold off, but it's kind of a downward consolidation. What is interesting is to see we have the initial higher low there. That's a confirmed low. The market, either if it breaks that level, then I'd expect further rand strength, so dollars all would get down. And then I'm just going to put another one across the top there, and we have a pretty decent looking triangle, asymmetrical triangle. A break above the upper trend line, we would probably see that rand weakness coming through quite seriously. A triangle as an ending pattern, it does happen. So a triangle as an ending pattern is normally a pretty strong reversal, and we could see dollar rand moving quite a bit higher. serious range weakness, and if it does break lower, I don't know how much of a continuation lower we can get. It might just end up being forming some support at the bottom there and forming a new consolidation level. We'll have to see how it works out. But certainly if the triangle does break to the downside, I will probably have a go at shorting dollars are. Have a look at the Aussie. Opened this morning. This is the hourly chart. It opened below Friday's close, but has since moved through, closed that little gap. If you're on a 5-minute chart, there would be a little gap there that's closed now, and the trend is still up. I'm looking for it to push through that 48,435 area, so just above that resistance, and then the ultimate is that wick. That would be the daily shooting star high. Break above that would negate the initial bearish signal, so I'm certainly not going to short it just because there's a candle pattern, but certainly that would give me a level of confidence. A break above that, I would expect the trend to continue. If it closes below that daily shooting star, if we go to a daily chart, you won't see it on the future here. Let's just go and have a look quickly at the index itself. So if it closes below that candle body, then I would consider that a confirmed shooting star, and the hourly will probably have turned over by then anyway and given us a short. So for now, the trend is still up and the longs are still in play. Look at gold. Gold's come off quite strongly off that base there. It wasn't really a pattern of any type, but certainly found some momentum going forward. Just finding some resistance in that. Let's just move this other thing out the way. So it's finding some resistance in the 1257, 1260 area. Didn't quite hit the absolute resistance, but certainly the sellers are looking at it at this moment. That big bullish candle there could be considered a blow-off candle. Close below that would more than likely see some retracement in this gold price. So for now, I'm just waiting. The trend hasn't changed. The trend essentially is still down according to the averages. So no trades on gold at this point for me. Then we have a look at pound yen. This is the daily chart. It's that resistance is still in play. Pound yen broke below support there at 145.25, and that looks to be following through. Next support level would be the 89 exponential moving average. If it bounces off that, I can get a 8 and 21 cross up, and I'll probably buy into the pound yen again. The problem I have with the pound at the moment, it's not the weakest currency, but it is one of the weaker currencies. So if we have a look at like a relative strength matrix of some sort, I've got a long-term trending matrix. I've got the strongest pair or the weakest pair at the moment is dollar CAD, and if we actually pull that chart up, you'll see what I'm talking about. So the dollar is losing ground quite seriously, and the Canadian dollar is actually one of the stronger currencies at this moment. And there we can see that's just the hourly, but there's the daily chart. I'm shorting here on a crossover over there and then a break of support, and this is now coming down to weekly support. So I'm quite keen to see what happens at this moment, but certainly according to my matrix, the dollar is the weakest overall, but the yen is weakest on daily and 4-hourly. So the yen and the pound could be really difficult trades because the pound is kind of in the middle of the strength matrix, so not looking that great, but yen certainly the weakest on the daily, with the dollar weakest overall. So if we can have a look at US dollar yen, it makes this trade very difficult, and we can see that this is in a consolidation, and that's because they're both weak. So knowing that means I'll just stay away from dollar yen for now. Pound US dollar, again, the pound being one of it's not really the weakest, but on the dailies only has a score of 3 out of 7. So on the dailies, it's still pretty weak, and with the dollar being weakest, just means pound dollar is going to struggle to actually hold on to highs. But these long-term trends obviously can last for very long periods of time, and the long-term trend is up on pound dollar. CAD yen is still battling to break above the neckline and hold the highs above neckline for that head and shoulders, but I'm quite keen on that trade. I'm watching it quite closely, so every day I'm just looking for a buy signal. Haven't seen one lately. Australian dollar, one of the strongest currencies, and that's holding above resistance. It's not a pair I trade regularly. It's a bit choppy. It's certainly that there's potential here for head and shoulders as well, and again, it's just not holding above the neckline. So trade safely, and we shall chat again next week, Monday. Thank you, Danae.
Thank you, Warren, and thank you, everyone, and have a lovely week.